I'm going to give you an overview of a company share option plan, commonly known as CSOP. A CSOP is an HMRC tax advantage share option plan and is a tax-efficient way for companies to deliver equity to employees. Under a CSOP, companies can grant options over shares worth up to £30,000 to each eligible employee. There is flexibility to structure the options to meet the commercial objectives of the company. For instance, the options can become exercisable on achieving an exit or on some other commercial objective. Companies can also implement CSOPs, where the options vest and become exercisable on a time basis, such as after 3 years or 5 years of grant. If options are exercised before an exit, then the participants would become shareholders and could receive dividends on the shares. The company can also distinguish good and bad levers and determine what happens in each of the lever scenarios. To be eligible for tax relief, the share options must generally be held for at least 3 years before exercise, and the exercise price must be no less than the market value of a share on grant. However, there are certain scenarios where option holders who exercise their options before 3 years could qualify for tax relief. This could be the case where the option holder ceases employment for one of the good lever reasons prescribed in the CSOP legislation. CSOP options exercised before 3 years on certain types of corporate transactions may also retain tax relief. Unlike with direct share acquisitions, there is no risk for the option holder in the event the share price falls. This is because they do not need to exercise the options and can simply allow the options to lapse. From the company's perspective, share option plans may be more simple to administer than restricted share plans. For instance, with restricted shares, if the participant is a bad lever and the company may want to purchase the shares off the individual, there is a buyback process to go through. With a share option plan, the options could simply lapse in such a scenario. The lapsing of a share option is simpler from an administrative perspective than going through the process of purchasing the shares off the individual. While the current CSOP limit is £30,000 for each eligible employee, this will be increased to £60,000 from the 6th of April 2023, as announced in the recent growth budget. This should make CSOP more attractive to companies going forwards, as the personal limit will be less restrictive. There are also specific conditions which must be met in relation to the share class to be eligible for CSOP. To be eligible for CSOP, the shares must be either employee control or open market shares. These share-related conditions will also be relaxed from the 6th of April 2023, as announced in the recent growth budget. This should make CSOP a more attainable proposition going forward for companies with multiple share classes. No employment income tax or national insurance charges should arise on the exercise of CSOP options, provided that the conditions for tax relief are met. Instead, when the shares are sold, any gains should be subject to capital gains treatment. The company would generally qualify for a corporation tax deduction on the amount of the option gain on exercise. If you are interested in learning more about CSOP or think it might be the right employee incentive plan for your business, please contact me or anyone else from the Share Plans and Incentives team.